I want to come back to that point on capital goods, and I was looking at more questions that were coming in on social media. And Deepak Kishan, he really sums it up, I think, for everybody. And he's saying the same thing, that capital goods manufacturing has been the space to be in. But the question is, now that the rally has already happened, should we actually start booking profits before elections, or can you still add to positions, buy more, or at least hold positions? Like you mentioned, I mean, these stocks have gone completely crazy. So what to do?
So here you have to be very bottoms up. You cannot paint the entire sector with the same brush. There is a possibility that even in a sector which has rallied so much, there might be few stocks where the risk reward is still looking favorable.
Okay.
But if the stock has already run ahead of its fundamentals, right, re-rating has been phenomenal, and you feel that the earnings are not matching with that, then maybe you should, take out your money and redeploy it somewhere else.
Okay.
But I would say that look at it from a bottoms up perspective. First, sector to sector, and then within sector also, because the returns of different companies within sectors have also been very different. It's not that a sector has given 10% return. That doesn't mean that every company in that sector has given similar return. There are companies which would have given 50%, and equally there will be companies which would have given minus 20%. So
which ones in this bucket, in this basket of capex, industrials, which ones do you like the most? So
my preference is towards the core capital goods companies, because that is where you are seeing the emergence of cycle after a long time. In fact, in India right now, a very interesting thing is happening in markets. There are 5 or 6 sectors which are domestic cyclicals facing. They are having an upcycle at the same time, almost after a long time. Right? So number 1 is capital goods, or broad private capex or capex industrial sector after 12 years. Then you have auto, where there is an upcycle going on after 5 years. Between 2018 to 2023, when the financials profit went up 5x, the auto profits were same, right? So auto is seeing a cycle after 5 years. Then there is hotels, which is seeing a cycle after 10 years.
Oh, we know that as consumers also,
Absolutely.
Right? You'll never find a reasonably priced hotel room anymore.
Then real estate, again after a decade, you are seeing an upcycle.
Yes.
And last but not the least is hospitals, where there was no cycle which I can remember of. Right? Because there were not many companies to play also in that space. You've seen a lot of new listings happening in the last 4 or 5 years. In fact, in our conference, which we just concluded a fortnight back, 19th Annual Global Conference, we had 2 main track CEO speakers from hospital space. So there's a 4 or 5 sectors where you're seeing domestic cyclical sort of tailwinds.
Hospitals, hotels, industrials, auto and real estate.
Yes.
That's actually really powerful, right? 5 big themes, big sectors which are on an upswing. And obviously that brings a lot of momentum with it. So we discussed industrials. Now let's talk about, another element which I think people will start worrying about. Let's talk about that LPG price cut, right? We had that 200 rupees cut coming in on cylinders. A, what's your view on the sector, on some of these oil marketing companies? And B, is there a real worry that we'll keep getting more of these populist measures which make Janta happy? Let's face it, it makes you and me also very happy, right? Whether it's tax changes, more freebies, and if that starts happening, will that be bad for the market?
So 2 different questions. The view on the sector, I've generally stayed away from this sector because it's very difficult to predict earnings there. Plus there is a lot of government involvement and there is a lot of volatility because they don't have pricing power. Coming to the second question, which is the giveaways or handouts, I think the quantum is what is going to decide the reaction of the market. If it's a once in a while 200 rupees here or there, see, look at it this way. The inflation has also gone up a little bit. We've been upwards of 5.5% for some time. And in an election year, any narrative around inflation makes a huge difference.
200 rupees tomatoes. Now they've come down.
Yes. But inflation and news around inflation and how it is perceived is always very, very critical and sensitive, more from the point of view of an incumbent. This government has drawn a lot of praise on their fiscal management. They've been very consistent and credible in terms of the overall
managing the deficit.
The arithmetic of the budget has become far more credible in the last 6-7 years. Earlier they were always very, I remember in earlier days after the budget, people always used to ask a lot of questions whether this maths is believable or not. Right? So those questions have stopped. So therefore, government also needs to remember that what they are going is also going to have an implication on their reputation as far as fiscal rectitude is concerned.
Sure.
So I am not going to get too worried about one of these measures getting announced. But remains to be seen because we are still 8 months away from the elections.
So got it. I think we need to basically watch out for the way these handouts and freebies, if at all they come, and what is their size. If it's big, then it could be a problem for the market. As long as it's more or less usual what we see every election year.
Because do remember, the size of our balance sheet, I'm talking about the central government, it's gone up to 44-45 lakh crores now, the total expenditure, right? So if your total spending on all freebies, giveaways, whatever promises you're doing is a minuscule percentage of your total budget, total expenditure, it's fine. I will not get, disturbed by the size in terms of the quantum size. When I say quantum, I basically mean as a percentage of that state's balance sheet. And not the absolute number.
Not the absolute number. As long as it's as a percentage of your total, size, your balance sheet, as you're saying, as long as that remains in check, it will be okay. Got that, Gautam. So now sum it up for us, and you've got to give us some election stocks, right? I mean, I'm calling them election stocks because, like we discussed, that maybe for the next 7-8 months, they could benefit from the sentiment, from the momentum. So if you were to, name 2 or 3 ones which are good election stocks and also good stocks otherwise.
Absolutely.
Which ones would they be?
So, Surbhi, if you look at our model portfolio, some of those stocks are already present there. So, we are quite positive on capex and auto. And I think given where interest rates are, given where the policy momentum is on manufacturing, infrastructure, the whole capex theme, they can continue to do well if there is a continuity in the government formation. Right? So, we have, say, for example, stocks like L&T, the big weight. Stocks like Ultratech, Godrej Properties, even SBI for that matter, SBI and ICICI, because in a very indirect way, they also benefit from the higher capex spending that happens in the economy.
They fund this
will fund those big
industrial
projects,
expansion that's
going
on.
So that is on the manufacturing side and capex side. On the consumption side, we are heavily overweight. Right? We have the highest overweight on consumption. We have about 19% weight allocated to a consumption stock.
And that's what kind of consumption? The toothpaste, sabun tel, or the movies and the hotels?
Yes.
Discretionary,
So our single largest preference for a very long period of time, for last 8-9 years, has been Titan. So that's part of the model portfolio. Then we have both the hotel stocks in the model portfolio, which is Indian Hotel and Lemon Tree. We have Zomato, which we added about a couple of months back, right? Then we have Kajaria, Metro. And on the staple side, we have ITC and Godrej. So about 7-8 stocks, which together comprise about 19% of the weight. And then the usual, big part of the weight in any model portfolio will always find allocated towards financials. Within financials, we have one difference, which is that we have a big overweight on PSU banks, whereas relatively neutral on private banks. Right? So our big overweight is on SBI and Bank of Baroda, and private banks are neutralish. And then we have a chunk of NBFC stocks where we are quite positive. So names like Bajaj Finance, Mahindra Financial, Piramal, they dominate our portfolio. And last but not the least is auto. As I keep telling you, that auto has turned around in a very strong fashion. After 16 consecutive quarters of earnings downgrade, last 3 quarters you have seen upgrades. Right? And this quarter again, auto was the best performing sector on earnings. So we have big overweight there. We have stocks like M&M, Ashok Leyland, Bharat Forge and Craftsman. So that by and large, basically
that's the
merges.
Overall, that's the overall portfolio. But I'm going to ask my question again. Now give me 3 or maybe 4 stocks, which are like probably good plays. Elections being one big trigger, but next 6-7 months, you think from this whole big portfolio, the 3 or 4 that you'd really watch out for, that you think
one of them would be L&T.
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 Yes.
Second will be Titan. And third will be Ultratech.
Ultratech.
Yeah, this three.
Very interesting.
Because they together, broadly represent your capex plus industrial plus consumption theme.
I was at a Titan store, I think last week or something. The way I see the crowds there, and the festive season hasn't even begun just yet. So, really, I think
it's reflected in the numbers also. It's one of the few consumer companies which consistently grows top line at 20%, right? Whereas most of the other consumer companies, staples, if you look at the last 5-10 year compounding, the top line has not crossed 10%. Hardly 1 or 2 companies have grown their top line at 10% plus each.
Imagine, people are buying jewelry probably at a higher rate than they're buying.
That's a classic income effect, right?
Yeah, wealth effect. We've discussed so much of business and work, but I want to know more about what you do. Do you get time at all? Considering, 4 o'clock is mid-afternoon for you. So what do you do to relax after work?
So I read a lot about a lot of things. So I read about politics a lot. That's a hobby after markets, obviously.
No wonder you know all these trends like the back of your hand on elections and politics.
So I like reading and listening to a lot of things around politics of the past also and the current also. And I spend a lot of time these days, last 2-3 years post-COVID, browsing through the OTT.
You're a huge OTT buff. I remember our conversations where Gautam will always know the latest things to watch and the hottest trends on
so that I started
OTT consumption
when I was at home and had very little avenues to sort of de-stress.
What are you watching these days?
So I finished this latest one which has come, Telgi.
I'm neck to neck. At least there I've also seen Telgi, so I feel good. Yeah.
Then I've seen the one on Sony also, Trial.
Okay.
Duggad on Amazon, I think. And couple of, I think they released some short movie in Amazon 2 days back near.
Okay.
Series
so whether it's market trends or corporate earnings or politics or the latest on OTT, fantastic. You manage it all. Phenomenal, phenomenal. Well, Gautam, it's been an absolute pleasure. Thank you so much for coming out, taking out the time, having this cup of coffee with me. And I think this was a very, very good conversation. Really enjoyed it.
My pleasure.
Thank you very much. And see you again. I'm sure we'll have you more often in the cafe, not just in the studios. So see you again soon.